Boom. Peace. Shalom. Assalamu alaikum. We're back. And we back. I am Kevin L. of the family Thomas. The whole light being. You know, because we light beings expressing energy and frequency. But I'm about to get into this trust knowledge. You know what I mean? Something that I've been looking into and putting pieces in place for. This is from a document called the Free Business Trust Manual. It's a PDF. You can find it online. Right? So, trust must have economic. Hold on, let's go back up. This section is called Step by Step Procedures in Setting Up Your Pure Equity Trust. This informational manual is strictly designed to aid you in the initial setting up, later on implementing, and then long range organizing and administration of your business trust operation. Every page and note is important, so please carefully read and understand your duties and requirements thoroughly before proceeding. Alright? And to facilitate that due diligence, got the Black's Law, 6th edition on deck. I got all 9 PDFs, but we're going to use the 6th edition. Right? We got the tax code. I mean, IRS regulations. So we can do some cross-referencing. We got the free dictionary. So we can get some
free
pronunciations of words. And this is the Free Business Trust Manual. It's free. It was given free. I'm going to give it out free. So it says, please read the following statement. Trust must have economic reality and or business interest. Read it again. Trust must have economic reality and or business interest. It means it has to exist and be doing business. The Creator expressly declares this to be an unincorporated 1041 irrevocable complex contractual organization business cast in the form of a trust which is founded upon the freedoms and rights inherent in the common law of the Republic of these united small states, capital, initial caps, of America, initial caps, as set forth by we the people in the Constitution of the United States, initial caps, the Bill of Rights, initial caps, and the original state constitutions of the several states, all small, compromise or comprising the Union of the United States of America. Right? What does of mean? Oh, that's the wrong one. Let's go here. All right, things bogged up. Hold on. There we go. We back. And the word we looking up is of.
Of.
And in the UK,
Of.
Old French, outfield, outfielder. That's OF, right? As the abbreviation. As a preposition, though,
Of.
one, derived or coming from, originating at or from. Wait a minute, it's another one I gotta open up. Of the preposition. Old English of, unstressed form of, preposition, adverb, quote, away, away from, end quote, from Proto Germanic, off, source also of Old Norse, off, Old Frisian, off, Dutch off, down, German, ab, quote, off, from, down, like offspring, from the father, down the line, from Proto Indo European root, apple, away, off. The primary sense is Old English, or the primary sense in Old English still was, quote, away, end quote, but it shifted in Middle English with the use of the word to translate Latin de, ex, and especially Old French de, which had come to be the substitute for the genitive case. Quote, of shares with another word of the same length. as the evil glory of being accessory to more crimes against grammar than any other. That's from Fowler. Fowler says of shares with another word of the same length, and that's the word as, the evil glory of being accessory to more crimes against grammar than any other. Also by 1837, of in print could be a non-standard or dialectal dialectal representation of have as pronounced in unstressed positions. Could've, must've, right? Which is like I've or could've, must've, right? Oppo, also op, Proto-Indo-European root meaning off, away. It forms all or part of ab, abaft, about, aft, after, and or apanthropy, apanthropy, apparative, aperture, apple, apocalypse, apocryphal, Apollyon, apology, apoplexy, apostle, apostrophe, apothecary, apotheosis, awkward, ebb, eftsoons, of, off, awful, overt, right? That's just the word of, right? Caused by, resulting from, away from, at a distance so as to be separated or relieved from the total or group comprising, composed or made from, you know, of, it's made of, a dress of silk, associated with or adhering to people of your religion, belonging or connected to the rungs of a ladder, possessing, having, a person of honor, on one's part, very nice of you, right? Containing or carrying a basket of groceries, specified as, named or called, a depth of 10 feet, the Garden of Eden, centering on, directed toward, a love of horses, right? You get the point. Back to it. Of the United States, right? Of America. The Creator further declares that this contractual trust will always maintain an economic reality and or a business interest, right? What is interest? Legally, let's scroll down. Interest, 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 interest. Thunderstorm popping off right now. In. It goes on and on. We getting there. We almost there. We almost there. Gonna have to come back and look at insurance too. Interest. Right here. Interest. The most general term that can be employed. Make it bigger. The most general term that can be employed to denote a right, claim, title, or legal share in something. That's interest. In its application to real estate or things real, the real estate, the real estate, it is frequently used in connection with the terms, quote, estate, end quote, quote, right, end quote, and, quote, title, end quote. More particularly, it means a right to have the advantage accruing from anything. Say that again. More particularly, it means a right to have the advantage accruing from anything, any right in the nature of property, but less than title, right? Interest. The word, quote, interest, end quote, is used throughout the restatement of torts. Second, to denote the object of any human desire. What you got interest in? What's your interests? What are your interests? See, interest. It almost sounds like interest, right?
interest,
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 right?
interest,
Right? Interest. Doesn't it sound like interest?
interest,
Right? The word interest or interest is used throughout the restatement of torts. Second, to denote the object of any human desire. Section 1. The word, quote, interest, end quote, is used in the restatement of property, both generically to include varying aggregates of rights, privileges, powers, and immunities, and distributively to mean any one of them. Interest, which may disqualify a judge from hearing a suit, is a personal, proprietary, or pecuniary interest, or one affecting individual rights of the judge. And liability, gain or relief to judge must turn on outcome of suit. And then the case laws, stated. See also add-on interest, adverse interest, against interest, beneficial interest, community of interest, compelling state interest, compound interest, conflict of interest, contingent interest, in personal property, coupons, equitable interest, executory interest, future interest, identity of interest, insurable interest, leasehold interest, right? Legal interest, lessee's interest, lessor's interest, New York interest, ownership, pecuniary interest, possessory interest, public interest, security interest, senior interest, terminable, terminable interest, usury, and vested interest. All those. Let's look at one more interest that's right here for us to see. Absolute interest. Absolute. Person has absolute interest in property when such is so completely vested in individual that no contingency can deprive him of it without his consent. So, too, he is the owner of such absolute interest who must necessarily sustain the loss if the property is destroyed. Absolute interest. See also fee simple and title. Right? They have easement. An easement is an interest in land and involves the title. For use of money, interest is the compensation allowed by law or fixed by the parties for the use or forbearance of borrowed money. Like when you go get money from the bank, they want it back with interest. Basic cost of borrowing money or buying on installment contract, right? So when people want a front or a credit, you know what I mean? It's to be paid back with interest. Payments: a borrower pays a lender for the use of the money. Cost of using credit or funds of another. A corporation pays interest on its bonds to the bondholders. Then there's accrued interest. Interest earned but not yet paid. See also accruing interest. Then you got accumulated interest. Interest on bonds and other debts which is due or overdue but not yet paid. Right? Then there's a Boston interest. You gotta go look at the Boston interest. Then you got compound interest. Interest upon interest, i.e., interest paid on principal plus accrued interest. Exists where accrued interest is added to the principal sum, and the whole treated as a new principal for the calculation of the interest for the next period. Interest added to principal as interest becomes due and thereafter made to bear interest. Right? Conventional interest, excessive interest. You can go look at all these interests. Right? To understand that it must always maintain an economic reality and or a business interest. And there are several types of interest in business, right? So continuing on. However, IRS regulation section 301.7701-4B states, quote, there are other arrangements which are often known as business or commercial trusts, which normally would have been carried on through business organizations that are classified as corporations or partnerships, unless if applying the principles set forth in section 301.7701-2 and 301.7701 3. The organization more nearly resembles an association or partnership than a trust. Emphasis added by the author. Let's look at 301.74b. Business trust. There are other arrangements which are known as trusts because the legal title to property is conveyed to trustees for the benefit of beneficiaries, but which are not classified as trusts for purposes of the Internal Revenue Code because they are not simply arrangements to protect or conserve the property for the beneficiaries. All right? These trusts, which are often known as business or commercial trusts, generally are created by the beneficiaries simply as a device to carry on a profit making business, which normally would have been carried on through business organizations that are classified as corporations or partnerships under the Internal Revenue Code. It's under their code. However, the fact that the corpus of the trust is not supplied by the beneficiaries is not sufficient reason in itself for classifying the arrangement as an ordinary trust rather than as an association or partnership. The fact that any organization is technically cast in the trust form by conveying title to property to trustees for the benefit of persons designated as beneficiaries will not change the real character of the organization if the organization is more properly classified as a business entity under 301.7701 2. And we'll go to that. Business entities. This is what this section covers. For purposes of this section, in section 301.7701 3, a business entity is an entity recognized for federal tax purposes, including an entity with a single owner that may be disregarded as an entity separate from its owner under section 33 or 301.7701 3, that is not properly classified as a trust under section 301.7701 4, or otherwise subject to special treatment under the what? Internal Revenue Code. A business entity with two or more members is classified for federal tax purposes as either a corporation or a partnership. A business entity with only one owner is classified as a corporation or it is disregarded. If the entity is disregarded, its activities are treated in the same manner as a sole proprietorship, branch, or division of the owner, right? But see paragraph C2, 3 through 4 of this section for special rules that apply to an eligible entity that is otherwise disregarded as an entity separate from its owner. This is the tax code, right? It's a foreign corporation and its rules. And they want we the people to form our business under those terms, right? By doing so, that gives them an interest in our business. And you got to be careful about that, in my opinion. So we went through the sections 77012 and 77014, right? Which covers all this. To continue reading from the PDF, Section 301.7701 2A1 clarifies the characteristics of corporations. It states, quote, there are a number of major characteristics ordinarily found in a pure corporation which, taken together, distinguish it from other organizations. Right? These are: one, associates; two, an objective to carry on business and divide the gains therefrom; three, continuity of life; four, centralization of management; five, liability for corporate debts limited to corporate property; and six, free transferability of interest. End quote. The remainder of the section says that, quote, the organization must more nearly resemble a corporation than a partnership or trust. End quote. See IRS Revenue Ruling 75 258 and Morrissey et al. Versus Commissioner. So we gotta look this stuff up. Let's check out this PDF. Five pages. Seventy-five 258 is what we're looking for. 75 258. Can't find what I'm looking for. We'll just read it in the syllabus. One, this is the Morrison versus Commissioner of Internal Revenue, argued October 18th, 1935, decided December 16th, 1935. Under Revenue Acts declaring that the term, quote, corporation shall include, quote, associations, end quote, the Treasury Department was authorized to define the latter term by regulation, and thereafter to clarify or enlarge the definition in order to meet administrative exigencies and conform with judicial decisions. Exigencies.
Exigency.
Exigency. A pressing or urgent situation. An urgent requirement. A pressing need. Mhm. So, to meet the administrative exigencies and conform with judicial decisions. Two, enactment of the Revenue Act of 1924, providing, as in previous acts, that the term corporation shall include associations, did not fix the definition of the term association then in the regulations so that the department could not further adapt it to the administration of the act. 3. The view expressed by this court in Heck versus Malley that the degree of control by the beneficiaries was not a decisive test of whether a trust is an association and therefore subject to the special excise imposed on corporations, defined as including associations by the Revenue Act of 1918, is applicable also to general income taxes laid by the Revenue Acts upon corporations and thus upon associations. 4. Regulations of the Treasury Department adopting this view under the Revenue Act of 1924 held not in excess of its authority. 5. Revision of the Treasury regulations defining the term associations in the Revenue Act of 1924 was in effect approved by Congress in subsequent Revenue Acts through the reenactment without substantial change of the provisions so construed by the department. 6. Congress has the power to tax as a corporation an unincorporated association in the form of a trust which transacts its business as if it were incorporated. 7. Whether a trust may be classed and taxed as an association under the Revenue Acts of 1924 and 1926, which define the term corporations as including associations, joint stock companies, and insurance companies, is not dependent on its having a statutory organization or statutory privileges, or upon its use of corporate forms of procedure. Its trustees may perform the functions performed in corporations by officers and directors, and provisions of the trust instrument may take the place of bylaws. Hear that? 8. To constitute a trust, an association within the meaning of these acts, it is not essential that the beneficiaries should have control or should have such control as is commonly exercised by stockholders, or that they should hold meetings to elect representatives. 9. While the faculty of transferring the interest of members without affecting the continuity of the enterprise may be deemed to be characteristic, the test of such an association is not to be found in the formal evidence of interest or in a particular method of transfer. All right, back here. 10. A trust designed not for the purpose of holding and conserving particular property with incidental powers in the trustees, as in the traditional type of trust, but as a medium for the conduct of a joint business enterprise and a sharing of the gains, is to be classed as an association with the meaning of the Revenue Acts. Supra, when the following attributes, analogous to those of corporate organizations, are present. 1. Title to property embarked in the enterprise held by trustees as a continuing body during the existence of the trust. 2. Centralized management by trustees as representatives of beneficial owners, whether selected by or with the advice of beneficiaries or designated in the trust instrument with power to select successors. 3. Continuity uninterrupted by deaths among beneficial owners. 4. Means for transfer of beneficial interest and introducing new participants without affecting continuity. 5. Limitation of personal liability of participants to property embarked in the undertaking. 11. A trust was created to develop a tract of land through construction and operation of golf courses, clubhouses, etc., and for the conduct of incidental businesses, with broad powers for the purchase, operation, and sale of properties. The management and control were vested in the trustees, and the interests of the beneficiaries were represented by transferable common and preferred shares. It is held 1. That the trust constituted an association. It is held that 2. That sale or part of the property before the beginning of the tax years in question and conveyance of the remainder to a corporation in exchange for its shares did not alter its character, since it remained an organization for profit, with profit still coming in, and the powers of these, and the powers of the trustees continued. Is held 3. The character of the trust is revealed by the terms of the trust instrument. 12. Section 704A, Revenue Act 1928, providing that a taxpayer filing a return as a trust for a taxable year prior to 1925 shall be taxable as a trust and not as a corporation if under regulations or departmental rulings in force at time of filing the return it was considered to be so taxable, held inapplicable to a return for the year 1924 filed after the adoption of the Treasury Regulation or Treasury Regulations number 65, Article 1504, amending prior regulations so as to provide that operating trusts in which the trustees were not restricted to the mere collection of funds and their payment to beneficiaries, but were associated together in much the same manner as directors in a corporation for the purpose of carrying on a business enterprise, should be deemed to be associations regardless of the control exercised by the beneficiaries. Affirmed certiorari 295 U.S. 725 to review the affirmance of a decision of the Board of Tax Appeals which sustained income taxes laid upon a trust as an association. That is the syllabus. And then you got says certiorari 295 U.S. 725 to review the affirmance of a decision of the Board of Tax Appeals which sustained income taxes laid upon the trust as an association. Mr. Chief Justice Hughes delivered the opinion of the court. Petitioners, the trustees of an express trust, contest income taxes for the years 1924 to 1926, inclusive, upon the grounds that the trust has been illegally treated as an association. The Circuit Court of Appeals affirmed the decision of the Board of Tax Appeals, which sustained the ruling of the Commissioner of Internal Revenue. We granted certiorari because of a conflict of decisions as to the distinction between an association and a pure trust. The decisions being described in one of the cases as, quote, seemingly in a hopeless state of confusion, end quote. The facts were stipulated. In the year 1921, petitioners made a declaration of trust of real estate in Los Angeles. They were to be designated in, quote, their collective capacity, end quote, as, quote, Western Avenue Golf Club, end quote. The trustees were authorized to add to their number and to choose their successors, to purchase, encumber, sell, lease, and operate the, quote, described or other lands, end quote, to construct and operate golf courses, clubhouses, etc., to receive the rents, profits, and income, to make loans and investments, to make regulations, and generally to manage the trust estate as if the trustees were its absolute owners. The trustees were declared to be without power to bind the beneficiaries personally by, quote, any act, neglect, or default, end quote, and the beneficiaries and all persons dealing with the trustees were required to look for payment or indemnity to the trust property. The beneficial interests were to be evidenced solely by transferable certificates for shares which were divided into 2,000 preferred shares of the par value of 100 each and 2,000 common shares of no par value, and the rights of the respective shareholders in the surplus, profits, and capital assets were defined. Quote, share ledgers, end quote, showing the names and addresses of shareholders were to be kept. The trustees might convene the shareholders in meeting for the purpose of making reports or considering recommendations, but the votes of the shareholders were to be advisory only. The death of a trustee or of a beneficiary was not to end the trust, which was to continue for 25 years unless sooner terminated by the trustees. All right, that's it so far. During the years 1921 and 1922, the trustees sold beneficial interests and paid commissions on the sales. About 42 acres of the 155 acres described by the Declaration of Trust were plotted into lots which were sold during the years 1921 to 1923, most of the sales being on the installment basis. On the remaining property, a golf course and clubhouse were constructed, and in 1923, this property with the improvements was conveyed to Western Avenue Golf Club Incorporated, a California corporation, in exchange for its stock. Under a lease from the corporation, petitioners continued the operation of the golf course until January 12, 1924. After that date, petitioners' activities were confined to collections of installments of principal and interest on contracts of purchase, the receipt of interest on bank balances and of fees on assignments by holders of purchase contracts, the execution of conveyances to purchasers, the receipt of dividends from the incorporated club, and the distribution of monies to the holders of beneficial interest. On December 31st, 1923, the total number of outstanding beneficial interests was 3,016, held by 920 persons. By December 31st, 1926, the number of interests had been gradually decreased to 2,172, held by 275 persons. The holdings by the trustees ranged approximately from 16 to 29%. This is a long case that we can get to at another time. Let me pause this recording for a moment. All right. Back to the Morrissey versus Commissioner. As we get into trust having an economic reality and business interests. So the petitioners contend that they are trustees, quote, of property held in trust, end quote, within Section 219 of the Revenue Acts of 1924 and 1926, and are taxable accordingly, and not as an, quote, association, end quote. Right? They urge that to constitute an association, the applicable test requires, quote, a quasi corporate organization in which the beneficiaries, whether or not certificate holders, have some voice in the management and some control over the trustees, and have an opportunity to exercise such control through the right to vote at meetings. Any of this stuff sound familiar? End quote. And that, in any event, the activities in which petitioners were engaged during the tax years under consideration did not constitute, quote, a carrying on of business, end quote, within the rule applied by this court. The government insists that the distinction between associations and the trusts taxed under Section 219 is between, quote, business trusts on the one side, end quote, and other trusts, quote, which are engaged merely in collecting the income and conserving the property against the day when it is to be distributed to the beneficiaries, end quote. That Congress intended that all, quote, business trusts, end quote, should be taxed as associations. The government insists that the distinction between associations and the trusts taxed under Section 219 is between business trusts on the one side and other trusts which are engaged merely in collecting the income and conserving the property against the day when it is to be distributed to the beneficiaries. That Congress intended that all business trusts should be taxed as associations. 1. The Revenue Acts of 1924 and 1926 provided the term corporation includes associations, joint stock companies, and insurance companies. All right. A similar definition is found in the earlier Revenue Acts of 1917, Section 200, 1918, Section 1, and 1921, Section 2, and also in the latter Revenue Acts of 1928, 701A2, 1932, Section 1111A2, and 1934, Section 801A2. The corporation tax of 1909, which imposed an excise tax upon the privilege of doing business in a corporate capacity, embraced associations having a capital stock represented by shares and, quote, organized under the laws of the United States or of any state or territory. All right, end quote. Shit, I gotta read that again for myself. The Corporation Tax Act of 1909, which imposed an excise tax upon the privilege of doing business in a corporate capacity, is a privilege to do business in a corporate capacity. Embraced associations having a capital stock represented by shares, and, you know, it was organized under the laws of the United States or of any state or territory. Right? The Income Tax Act of 1913 taxed the net income of, quote, every corporation, joint stock company or association, and every insurance company organized in the United States. That's key. In the United States. No matter how created. See, that's when you need to know which United States are they talking about. But we know this is talking about the federal government. No matter how created or organized, not including partnership. End quote. The case of Crocker versus Malley arose under the latter act. The court found that the declaration of trust in that case, relating to mill property, was on its face an ordinarily real estate trust of the kind familiar in Massachusetts trust, and that the function of the trustees was not to manage the mills, but simply to collect the rents and income of such property as may be in their hands, with a large discretion in the application of it, but with a recognition that the receipt holders are entitled to it, subject to the exercise of the powers confided to the trustees. The court thought that if it were assumed that the words, quote, no matter how created or organized, end quote, applied to, quote, association, end quote, still it would be a, quote, wide departure from normal usage. To call the beneficiaries a joint stock association when they were not partners and had no joint action or interest and no control over the fund, nor could trustees by themselves be treated as a joint stock association within the meaning of the act unless all trustees with discretionary powers are such. The decision in Crocker versus Malley was rendered in March 1919, and the Treasury Department thereupon assumed that the degree of control exercised by the beneficiaries over the management of the trust was determinative of the question whether the trust constituted an association. It was in that view that the regulations under the Revenue Acts of 1918 and 1921, and distinguishing an association from a trust, provided as follows. Quote, if, however, the cestui trust have a voice in the conduct of the business of the trust, whether through the right periodically to elect trustees or otherwise, the trust is an association with the meaning or within the meaning of the statute. Cestui trust, which some say is what the United States is operating. They are trustees of a trust, and we are the beneficiaries. Right? Because they have associated us with them. Regulations number 4562, Article 1504. This ruling continued until our decision in May 1924 in Hecht versus Malley, and furnished the test which the Board of Tax Appeals applied in its determinations for earlier years. Accordingly, the Board, in the case now before us, holding that under the trust instrument the shareholders had no control over the trustees or the management of the business, determined that the trust was taxable as such and not as an association for the years 1921, 1922, and 1923. The case of Hecht versus Malley related to the excise taxes imposed upon associations by the Revenue Acts of 1916, Section 407, and 1918, Section 1000A. The provision of the Act of 1916 retained the qualifying words of the Corporation Tax Act of 1909. Quote, organized under the laws of the United States or any state or territory. End quote. And the court followed the construction placed upon those words in Elliott versus Freeman, supra. But the Act of 1918 omitted this qualification, and the excise tax was laid upon corporations applied to, or should I say, and the excise tax as laid upon corporations applied to associations under the general definition. The court thus found the terms of the Act of 1918 to be in significant contrast to the provisions of the Acts of 1909 and 1916. The omission of the qualification showed the intention of Congress. Quote, to extend the tax from one imposed solely upon organizations exercising statutory privileges as theretofore, to include also organizations exercising the privilege of doing business as associations at the common law, at the common law, at the common law, end quote. Shorn of the restriction, the word association appeared to be used in its ordinary meaning, and we refer to several definitions found in standard dictionaries, as e.g., a body of persons united without a charter. But upon the methods and forms used by incorporated bodies for the prosecution of some common enterprise. End quote. Another one, quote, a body of persons organized for the prosecution of some purpose without a charter, but having the general form and mode of procedure of a corporation. End quote. These are all the definitions of association. Quote, an organized but unchartered body, analogous to but distinguished from a corporation. All right, and let's just go check out charter real quick. Charter. Noun, an instrument emanating from the sovereign power in the nature of a grant either to the whole nation or to a class or portion of the people, to a corporation or to a colony or dependency, assuring to them certain rights, liberties, or powers. Such was the quote Great Charter end quote or the Magna Charta, and such also were the charters granted to certain of the English colonies in America. English colonies in America. America. A charter differs from a what? Constitution. In that the former is granted by the sovereign, while the latter is established by the people themselves. Right? A city's organic law, charter of municipal corporation, consists of the creative act of incorporation, together with all those laws in force which relate to the incorporation, whether defining the powers of the corporation or regulating the mode of exercise thereof. And statute does not fail to become part of charter simply because it is not labeled as such. Opinion of the justices. And that's the opinion citation. A charter is an act of a legislature creating a business corporation or creating and defining the franchise of a corporation. Under modern statutes, a charter is usually granted by the state secretary of state, right? Who grants it to you. Like, this is why we're talking about establishing something outside of all these people who try to get in the way of you doing what you are what you inherently have the right to do. What are they talking about? who acts under general statutory authority conferred by what? The state legislature. Also, a corporation's constitution or organic law. That is to say, the articles of incorporation taken in connection with the law under the corporation under which the corporation was organized. And I have those documents. Articles of incorporation. The authority by virtue of which an organized body acts. A contract between the state and the corporation. See? Between the corporation and the stockholders, and between the stockholders and the state. See that circle? Then there is the leasing or hiring of airplane, vessel, or the like. Charter party. In Old English law, a deed or other written instrument under seal, a conveyance, covenant, or contract. Then you have bank charters. Document issued by governmental authority permitting, got to have a permit for that, a bank to operate and transact business. There's a bareboat charter. Bareboat charter. Charter where ship owner only provides ship, with charterer providing personnel, insurance, and other necessary materials and expenses. Right? Blank charters, charter of agreement, charter of affreightment, gross charter, time charter, chartered life underwriter. Right? Those are all the different kind of charters. Alright? So it continues. We express the view that the word association, as used in the excise tax provision of the Revenue Act of 1918, clearly included Massachusetts trusts of the sort there involved, having quasi corporate organizations under which they are engaged in carrying on business enterprises. We were careful to say that it was then unnecessary to determine what other form of associations, if any, the act embraced. Right? In Hecht case, the trustees of the Hecht and Haymarket trusts relied strongly upon the decision of Crocker v. Malley as conclusively determining that those trusts could not be held to be associations unless the trust agreements vested the shareholders with such control over the trustees as to constitute them more than strict trusts within the Massachusetts rule. Reviewing the reasoning of that decision, we pointed out that it was not authority for the broad proposition advanced. We concluded that when the nature of the trust was considered, as the petitioners were not merely trustees for collecting funds and paying them over, right, fiduciary duties, but were associated together in much the same manner as the directors in a corporation for the purpose of carrying on business enterprises, the trusts were to be deemed associations within the meaning of the Act of 1918. This was true independently of the large measure of control exercised by the beneficiaries. And we rejected the view that Congress intended that organizations of that character should be exempt from the excise tax on the privilege of carrying on their business merely because such a slight measure of control may be vested in the beneficiaries that they might be deemed strict trusts within the rule established by the Massachusetts courts. It sounds like people were trying to say, stay out of our business. Stop, trying to get interest in what we're doing over here. Because, on a side note to all this stuff, we pay taxes, right, to the government and its agencies or agency, right? And then what does the government in turn do with that money? First of all, that is the debt. U.S. national debt, right? When did the United States go bankrupt? When did the when when did the United States go bankrupt?
According to thebalance.com, first federal bankruptcy law. In 1800, Congress passed the first federal law relating to bankruptcy, called the Bankruptcy Act of 1800.
The United States went bankrupt in 1933 and was declared so by President Roosevelt by Executive Orders 6073, 6102, 6111, and Executive Order 6260. See Senate Report 93-549, pages 187 and 594 under the Trading with the Enemy Act. 65th Congress, Session 1, Chapters 105, 106, October 6, 1917, and as codified at 12 USCA 95A. The fact of the matter is, the United States did go bankrupt in 1933 and was declared so by President Roosevelt by executive order. And you see, need to see more. Need to see more. In 1933, the United States went into Chapter 11, restructuring, hence bankruptcy. Chapter 11 is a form of bankruptcy designed for corporations, not governments. When this bankruptcy took place, our constitutional republic was dissolved and replaced with a corporate democracy, social corporate fascism. That's the lie of the U.S. bankruptcy of 1933 from the trenchesworldreport.com. The U.S. government went bankrupt in 1933 and is no longer a republic. United States Congressional Record, March 17, 1993, volume number 33, page H-1303. The speaker is Senator James Traficant, Jr., Ohio, addressing the House. Alright, so be clear. This is why they was talking about stay out of our business, you bankrupt. And you see the debt clock. We pay the taxes. What do they do with the money? What are they spending it on? What does the federal government fund the most?
At roughly 16.8%, health spending is the largest budget function category for the federal budget. It is followed by Medicare, 16%, and national defense, 15%. 18. How can federal spending stimulate the economy? In theory, federal spending can help stimulate demand, which helps the overall economy grow.
See, that's not adding up. 16.8% plus 16%, right? That's 32.8%. And then 15%, that's 47%, 47.8%, right? Where is the other 53%? What is the federal government spending the most on?
According to usaspending.gov, in fiscal year 2021, the federal government collected $4.05 trillion in federal revenue. Since the government spent more than it collected, the deficit for 2021 was $2.
Social Security, Defense, and Medicare. Yep. Oh, they got a pie chart. For 2021. Discretionary spending, right? That's a lot to get into. We sidetracking. Let me get back on track. So we understand charters and we understand people wanting to be unincorporated, and we understand people wanting to do business privately and maintain control of their business and not have their businesses taxed by a bankrupt corporation that don't know how to balance their books. So let's continue with what the case citing is before we go back to the Free Business Trust Manual and setting up trust. Let's see what they're talking about, why they got beef against trust and what trusts are trying to do. This is talking about the Massachusetts Trust. So, following this decision, the Treasury Department amended its regulation so as to provide that the distinction between an association and a trust should no longer depend upon beneficiary control. Right? That's how they changed it. The new provision read, quote, operating trusts, whether or not of the Massachusetts type, in which the trustees are not restricted to the mere collection of funds and their payments to the beneficiaries, but are associated together in much the same manner as directors in a corporation for the purpose of carrying on some business enterprise, are to be deemed associations within the meaning of the Act, regardless of the control exercised by the beneficiaries. Regulation number 65, Article 1504, issued in October 1924 under the Revenue Act of that year. This provision was amended in August 1925 so as to read as follows. Quote, if, however, the beneficiaries have positive control over the trust, whether through the right periodically to elect trustees or otherwise, an association exists within the meaning of Section 2. Even in the absence of any control by the beneficiaries, where the trustees are not restricted to the mere collection of funds and their payment to the beneficiaries, but are associated together with similar or greater powers than the directors in a corporation for the purpose of carrying on some business enterprise, the trust is an association within the meaning of the statute. And remember, they're trying to tax you on the privilege of doing business, as if they give you the privilege to do business. I can go next door to my neighbor and initiate business. Hey, would you like your grass cut? Sure. What would you like? Um, that's when the tricky part come in, right? Because here's the other thing that comes in. The dollar. This right here. This right here. The dollar. Doing business, and this is how they gain interest into the business. Because we transact with these certificates. Right? It's a benefit of doing business with who? The Treasury, right? Cause who prints the dollars? Who prints dollars?
According to thebalance.com, key takeaways. People say the Fed is printing money because it adds credit to accounts of federal member banks or lowers the federal funds rate. The Fed takes both of these actions to increase the money supply. The Bureau of Engraving and Printing, under the U.S. Department of Treasury, does the actual printing of cash for circulation.
Department of Treasury, right? Take us right back there, right? So, the text of the regulations relating to associations, so far as pertinent here, promulgated under the Revenue Act of 1924, is set forth in the margin. Regulations number 65, Articles 1502, 1504 as amended. These regulations were continued substantially unchanged under the Revenue Acts of 1926 and 1928, number 69, Articles 1502, 1504, number 74, Articles 1312 and 1314. The corresponding regulations under the Act of 1932 were somewhat modified. Number 77, Article 1314, and these were considerably expanded by the regulations issued under the Revenue Act of 1934, number 86, Article 801-2 and 801-3. 2. As the statute merely provided that the term corporation should include associations without further definition, the Treasury Department was authorized to supply rules for the enforcement of the Act within the permissible bounds of administrative construction. Nor can this authority be deemed to be so restricted that the regulations, once issued, could not later be clarified or enlarged so as to meet administrative exigencies or conform to judicial decisions. Compare Murphy Oil Company versus Burnett. We find no ground for the contention that by the enactment of the Revenue Act of 1924, the department was limited to its previous regulations as to associations. And while the case of Hecht versus Malley was concerned with the special excise tax provision of the Revenue Act of 1918, the ruling of the court that the degree of the control by the beneficiaries was not a decisive test in that relation could, by similar reasoning, be applied to the general income taxes laid by the Revenue Acts upon corporations and thus upon associations. These general income taxes covered both those taxes which in their nature were excise taxes on business and as such could have been laid prior to the 16th Amendment, and those taxes on other income which were permitted by that amendment. 16th Amendment. Every time I do it, you gonna do that? 16th Amendment. 16th Amendment.
Here's some information that might help.
16th Amendment.
According to Investopedia.com, the 16th Amendment to the U.S. Constitution was ratified in 1913 and allows Congress to levy a tax on income from any source.
Levy a tax on income from any source. But who is the Constitution for? The federal government, which is a business. Stanton versus Baltic Mining Company. We think that the department did not exceed its powers in rewriting its regulation. In the light of the decision in Heck versus Malley, so as to provide with respect to the income taxes in general to be paid by associations, that the extent or lack of control by the beneficiaries of a trust should not in itself determine whether there was an association within the meaning of the statute. That the revised regulation had congressional approval is persuasively evidenced by the fact that the regulation, as amended in 1925, was continued without substantial alteration until when? 1933. And meanwhile, Congress reenacted without change the general provision as to associations in the Revenue Acts of 1926, 1928, and 1932. The question is not one of the power of Congress to impose this tax upon petitioners, but is simply one of statutory construction, whether Congress has imposed it. The difficulty with the regulations as an exposition was that they themselves required explication. Explaining to do. They or that they left many questions open with respect both to their application to particular enterprises and to their validity as applied. Right? The so-called control test had led to much litigation. Motherfuckers went to court, and the change in the regulations after the decision in Heck versus Malley caused increased uncertainty. Is there any? UFC comes up. Check this out.
Money, power, and fame have more influence than you think. And it gets a lot more influential when it's not just one or two people, it's a whole family. Hey, when you've got a lot of sway in the goings on of, well, everything.
Now, do you think those people, them families, have trust set up? Business trust? Of course they do. Is the IRS fucking with them? Of course not. Why? Because they own the IRS. It's their business.
That's why today we are looking at the most powerful families in the world. Some are superstars, some gained incredible wealth very quickly, and some inherited their massive fortunes. So basically, they were born billionaires. Here's a peek into the families that are secretly ruling the world, whether you want them to or not. First on our list is the Koch family, not to be confused with Coke as in Coca-Cola, although certainly Coca-Cola has a lot of sway too. I mean, all they have to do is threaten to halt production on everyone's favorite caffeinated beverage, and caffeine junkies would riot. But we kid. We're talking about Coke as in the Koch brothers, and their massive business, Koch Industries. To give you an idea of just how massive we're talking, Koch Industries is the second largest privately owned company in the United States. They rake in a colossal $110 billion every year in revenue. Yeah, this is the big leagues, people. Koch Industries was founded by Fred Koch in 1940, and for years, it was owned by his two sons, David and Charles, known as the Koch brothers. David, who passed away last year at 79 years old, stepped down from his position due to health issues in 2018. But his brother Charles, who is 84, still acts as the CEO to this day. Just what kind of influence does the Koch family have? Well, due to some rather smart acquisitions, including the $22.5 billion purchase of Georgia Pacific in 2005, every time you buy your everyday supplies, you may well be putting money right into the pockets of the Kochs.
That's what I mean. Just to show you. So, it was these companies and these people and probably members of these families who was arguing about the Treasury Department and all this shit. Because remember, gold was being taken and we were starting to get these funky ass debt notes. Alright. So, the so-called control test had led to much litigation, and the change in the regulation after the decision in Heck versus Malley caused increased uncertainty. That situation put in a strong light by the action of Congress in order to afford relief to taxpayers in enacting Section 704 of the Revenue Act of 1928 as a retroactive provision applicable, as stated, to trust returns which had been filed for a taxable year prior to 1925 under previous regulations and rulings, and also by giving an option to a trustee in specified circumstances in relation to the Revenue Act of 1926 and prior acts. While it is impossible in the nature of things to translate the statutory concept of association into a particularity of detail that would fix the status of every sort of enterprise or organization which ingenuity may create, man, because you can come up with all kinds of ways. The recurring disputes emphasize the need of a further examination of the congressional intent. 3. Association implies associates. It implies the entering into a joint enterprise and, as the applicable regulation imports, an enterprise for the transaction of business. This is not the characteristic of an ordinary trust, whether created by will, deed, or declaration, by which particular property is conveyed to a trustee or is to be held by the settlor on specified trusts for the benefit of named or described persons. Such beneficiaries do not ordinarily, and as mere cestui trust, plan a common effort or enter into a combination for the conduct of a business enterprise. Undoubtedly, the terms of an association may make the taking or acquiring of shares or interests sufficient to constitute participation, and may leave the management or even control of the enterprise to designated persons. Right? Undoubtedly, the terms of an association may make the taking or acquiring of shares or interests sufficient to constitute participation, and may leave the management or even control of the enterprise to designated persons. But the nature and purpose of the cooperative undertaking will differentiate it from an ordinary trust. In what are called business trusts, the object is not to hold and conserve particular property with incidental powers, as in the traditional types of trusts, but to provide a medium for the conduct of a business and sharing its gains. Thus, a trust may be created as a convenient method by which persons become associated for dealings in real estate, the development of tracts of land, the construction of improvements, and the purchase, management, and sale of properties, or for dealings in securities or other personal property, or for the production or manufacture and sale of commodities, or for commerce or other sorts of business, where those who become beneficially interested, either by joining in the plan at the outset or by later participation according to the terms of the arrangement, seek to share the advantages of a union of their interests in the common enterprise. The government contends that such an the government contends that such an organized community of effort for the doing of business presents the essential features of an association. Petitioners stress the significance of and the limitations said to be implied in the provision classifying associations with corporations. 4. The inclusion of associations with corporations implies resemblance, but it is resemblance and not identity. The resemblance points to features distinguishing associations from partnerships as well as from ordinary trusts. As we have seen, the classification cannot be said to require organization under a statute or with statutory privileges. The term embraces associations as they may exist at common law. Heck versus Malley Supra. We have already referred to the definitions quoted in that case showing the ordinary meaning of the term as applicable to a body of persons united without a charter, but upon the methods and forms used by incorporated bodies for the prosecution of some common enterprise. These definitions, while helpful, are not to be pressed so far as to make mere formal procedure a controlling test. The provision itself negatives such a construction. Thus, unincorporated joint stock companies have generally been regarded as bearing the closest resemblance to corporations. But in the Revenue Acts, associations are mentioned separately and are not to be treated as limited to joint stock companies, although belonging to the same group. While the use of corporate forms may furnish persuasive evidence of the existence of an association, the absence of particular forms or of the usual terminology of corporations cannot be regarded as decisive. Thus, an association may not have directors or officers, but the trustees may function in much the same manner as the directors in a corporation for the purpose of carrying on the enterprise. The regulatory provisions of the trust instrument may take the place of bylaws, and as there may be, under the reasoning in the Hecht case, an absence of control by beneficiaries such as is commonly exercised by stockholders in a business corporation, it cannot be considered to be essential to the existence of an association that those beneficially interested should be or should hold meetings or elect their representatives. Again, while the faculty of transferring the interests of members without affecting the continuity of the enterprise may be deemed to be characteristic, the test of an association is not to be found in the mere formal evidence of interest or in a particular method of transfer. And we're going to call this one right here Part 1. And I leave out the same way I came in. Kulum. Peace. Shalom. Salamu alaikum. Salamu alaikum. Wadu.